bad joke. Dropped at the first sign of trouble. They're only as good as the world allows them to be. I'll show you. When the chips are down, these civilized people, they'll eat each other. See, I'm not a monster. I'm just ahead of the curve.
Welcome to Market Makers, everybody. A special Saturday transmission for you. Lee may post this tonight or I might have him post it tomorrow morning, but Sunday is the Super Bowl. And if my plans go well, I'll be too hungover Monday morning for a video. So I thought it'd be best to get this pertinent information out to you today, if possible. Guys, we have a pivotal week approaching here in the marketplace. We had Bitcoin break out to the kill box I shared with you last video. We're going to cover these details in depth, but we need to talk about what's happening in the market because remember, this is Market Makers. Tomorrow's TA today, often imitate it, never replicate it. The market cycle I have for you, you're not going to hear or see on Bloomberg. You're not going to hear or see on CNBC and on YouTube, guys. Remember, we're looking for this corrective move. Traditionally, we covered the fractal patterns last video. So if you're one of the hundreds of new subs, catch up, watch the last video. But traditionally, the market starts to top. The S&P will start to top mid-February and then break down in this corrective move, 8 to 10%, S&P 4,500, 4,600, Bitcoin 32, 33K, in that range, guys. So we're going to cover all of this in the charts. But after we make this corrective move, a lot of the YouTubers out there saying this is the big crash, right? The big 1929 meltdown. What I think is going to happen and what separates me from a lot of different people is the psychology of the market. BTFD, buy the effing dip, is going to step in. Tom Lee will come right back out on CNBC and they'll say generational buying opportunity, discounts, and all the Mag 7. So I think the market's going to push right back up to that late March into April all-time high, new all-time high in the marketplace. And then we will once again peak and then sell off. It could be a black swan, an unforeseen event that takes the market down. It could be a black rhino, an easily foreseeable event such as the recession that nobody has forecasted. Understand this. The Fed, no recession. The government, the authorities, no recession. Wall Street, no recession. Me, you're getting a recession because you get a recession every single time. 3-month, 10-year yield and curve inversion, 55-year track record, zero false signals, just now hitting the average time when you start to see the recession and all the warning signs are there. And of course, the leading economic indicators, which are telling you you're getting a recession, zero false signals, 55-year track record. So that's going to happen, guys. And so when we have that selling event, selling into the summer, possibly into the fall, that is when the shit hits the fan and the market needs to decide. And the Fed will try to save the market just like they did in the previous two bubbles. They're going to cut dramatically. They're going to print money. They got to protect the lizards on Wall Street. They got to protect the top 1%. And they're going to do all those events. Now, the key is in the past, Y2K, didn't stop the NASDAQ from dropping 84% and the S&P 50%. And of course, the GFC, the S&P fell 57%. Can the Fed save the market here in the summertime, or is the market going to do what it always does and continue to fall? There's going to be massive rallies in between. There's going to be sell-offs. So guys, this is a trading channel that understands cycles, understands market history, and you're getting all this information here. Be sure to like and subscribe because we are shadow banned on YouTube. And people ask in the comments, how do we know we're shadow banned? Because YouTube told us. They contacted Lee and said they can't promote our channel because we use copyrighted material. You guys know we like to sample movies and have fun on this channel. And we use offensive language not appropriate to the genre of videos that we make, which I don't know what the they're talking about because I use normal language. But regardless, guys, this channel grows organically. So share it, continue to share it with your friends, anybody that would like this material, and definitely like and subscribe. I'm sure it helps at some level. Guys, let's go ahead and start the show. As always, boys and girls, this show is brought to you by SimpleFX and BingX. If you want to trade these Ponzi markets, check out our fantastic sponsors. They support the program. They support the transmission. With our link, you do get exclusive bonuses up to $5,000 on SimpleFX. No games, no gimmicks. That link is posted in the YouTube comments as well as the video description. Message Lee with any questions in the Telegram, and both of them will pay for your first month on our financial freedom seeking Discord. Let's start off with ES1. This is the proxy for the S&P, guys. This is what I showed you multiple videos now for multiple weeks, but last video in particular with Tom Lee now has this exact same fractal pattern, and he's expecting a 10% drawdown, the biggest bull on Wall Street. 20% up moves, symmetrical moves, 10% down moves, 20% up move, 10% down move. Here we are in our wave at 22.5%, expecting that 10% down move. What does this mean for the price targets? Well, quite simply, let's look at the bottom target first. Once again, this is still grinding. I expect it to grind a little bit higher this week still. So let's look at this, because the 1618, guys, takes you all the way down to 45.59. Just taking this measure from the top, the current local high, 9.67% retracement. Also filling this gap. Also, you could just land right at that pivot, right at the 4,600 level, get a wick down, fill this gap. That's the retracement price will do before bottoms, I believe, and then pumps back up to a new all-time high. Where is that new all-time high going to be? Well, again, we don't have the exact top yet, but let's look at this, okay? Because we have, let's get our fib. We can come down to just below this level, 45, let's do 45.80, okay? Right in this level, that's the drawdown, 1618, 5,337. So we'll call it 5,300 to 5,350 will be your new all-time high before price gets Epsteined, and then we have the sell-off event in through the summer. Okay, that's what we're looking at on the NQ, or on the ES, which is the S&P. But let's go ahead and look at the upside projections where this could go. So when we look at this on the upside, we can track our fibs here and see how well they are performing. And when we look at this right here, let's look at the 1618. 49.27, as you can see, lots of resistance here. Price capitulated, then price broke free. So that next harmonic expansion target is 5,067. Price is 5,044. I think this target's going to be hit. Could you have wicks above it, candles above it? Of course you could. Remember, it's just a few stocks right now moving the market cap weighted index higher, okay? But watch 5,067. Let's see if we start building a top in that range. Let's go ahead and move forward. This is the NQ, the proxy for the NASDAQ E-mini. So we went over these symmetrical patterns here in the marketplace last video. Again, highly suggest you watch it. Let's look at our upside targets, and we'll look at our downside targets. Upside targets, I want to take this breakout here from this previous accumulation range or current accumulation range. 18,147 is your next stop here for harmonic expansion at the 1618. You're at 1839, 18,039 right now. I think that's highly likely to be hit this week. So watch for this area, 18,147, 18,212, right in this range to start topping the market out. Remember, all of these indices have divergence occurring with both momentum and with the money flow. When we look at these targets, if we get to that level, the retracement here that we want to focus on for the NASDAQ, we're going to take it from the current high of where we are at, 1618, 15,835, puts you right back in this range, this pivot range. And perhaps just as important, you fill that gap. You fill that gap right there. So guys, keep in mind, this is a drawdown from the current high, let alone if it goes up another 100 points this week. This is a drawdown from that current high of 12.37%. So this is probably going to be closer to a 13% drawdown with the S&P going down to that 4,500 level. An excellent trading opportunity will develop. Remember, Options Expo is Thursday. Traditionally, the market starts to top. We went through this last video around that time frame, end of this week, going into next week. So we'll see where price gets to. Remember, time is more important than price. So just watch these indices. You can see here on the money flow, look at this bearish divergence that you have. You have your high right here in the money flow. And then all of this is divergent. Lower highs in the money flow all the way down. You're going to get a top, guys. So look at Bitcoin, because this was exciting. This pumped exactly to the kill box that we talked about from the last video. I even drew it in for you. So we have the retracement from this local high here, and I drew this in for you above the 786. I said, I want to see Bitcoin get into this range, and it wicked perfectly just above it, the 886. I told you it's parabolic, right? 47,795 was the 886. You got to 48.2. Current price is 47.4 right now. Now remember, the key psychological number for Bitcoin is what? It's 50K. An article came out today. Michael Saylor just bought more Bitcoin. Of course he did. Of course he did. You always want to buy closest to the local top as possible if you're big money, big dumb money. I told you there's no smart money in this space. So could we get this projection up above 50K? I mean, I still think we can. I think we can hit that 50K, guys, only because the S&P and the NASDAQ may very well be grinding up into this week. So depending how quickly Bitcoin wants to move, we could hit that psychological number. Remember, we got to 48,986 here, just below 50K. And what an amazing head fake that would be if we end up making a pattern up here before we break down, with everybody getting super bullish in the marketplace. So we'll see if that plays out. Let's look at this on let's look at this on a smaller time frame first. Let's look at this on a 3 hours, because this has only been a candle or two on a daily. We don't have a pattern yet, guys. There's no pattern yet here in this range to really go over. You're stacking candles side by side, even here on the 3 hour. I mean, of course, just traditional three-way patterns here. This could be a double top that's forming and starts to break down. You get a 5-wave pattern, but this is a pattern you want to watch, an area you want to watch. But right now it's really, really early. Immediate resistance above you is 47,795. This is a BingX chart. So immediate resistance is just below 48K, and obviously your previous fractal of 48.2 that you got to. Let's see what price does here. If you start building some momentum to get that last surge, you got way overbought here, and especially in a smaller time frame. So if you can hold this range and then pop out towards the end of the week, wick 49.50K, max pain, max FOMO. This is how the markets like to act. Let's zoom out on the larger time frame. Again, our October 23rd, massive 54% winner I shared with you guys. Price pumped up. We shorted up here at the 618. Price fell down 20%, 54% up, 20% down. And when you look at this from this perspective, zoomed out, I mean, this could be a couple of different patterns. This could easily be just a large double top type pattern that's forming right here, right? Or this could be a soft head and shoulders type pattern that you see. I'm sure lots of people on YouTube are talking about those types of patterns. This is all assuming, of course, we don't come up to 50K and then make some type of new pattern that starts to break down. But you can see where we found support, guys, right at the 382, 39,520. Price propelled back up. When this thing pulls down, I showed you this last video as well, looking at the 618, the most commonly retraced 2-fib, 33,672. And once again, if we get another projection here from that low to the current high here on this up move, you're looking at the 1618 at 32.5. So 32.5 to 33.7, right in that range. It's a harmonic sweet spot for price to come down to. And guys, why are these great trades? Because if this plays out, whether it starts making a pattern here, a bearish pattern, or slightly higher at 50K, if this plays out, it's a 30% move to 33.6, and it's a 33% move, a Dow retracement to 32,542. Again, welcome to the channel. Let's look at DAX. The DAX Same resistance, guys, 17,072. Remember, this moves with the US markets. Your upside next target could be 17,241 if the DAX wants to get a little bit frisky. But the downside target is what many people are interested in, especially if you're going to buy long. Then I'm looking for the DAX and the correction in the US markets to come down to 16K, 16,039. The DAX would be breaking down. This would be a double top pattern that would break. And this is where the DAX could potentially find support and then start progressing back to the upside. Let's look at the Euro Stoxx 50 because we had a key harmonic target hit here on the Euro Stoxx 50. Looking at this retracement level, boom, right at the 1618, the golden ratio 47.51 hit it to the dollar, literally to the dollar. Now that's the lower level target. And again, all this is going to depend when the US markets start topping and start breaking down, because the higher level target on Stoxx 50 is 48.29 for the 1618, and you're in that in-between zone, okay? So it's all going to depend on the US markets, but the reason this is an interesting asset to trade is it retraces heavily with the US markets. 5% move here just on this correction from December down to January. But what did it do on the larger correction that we had? Remember, we had the July top, October low, right? July top, October low, 11% correction. So this retraces and moves with the US markets, give or take a week or so. So I'm watching Stoxx 50. My European friends probably are as well. This could be a fun one to trade. Let's go ahead and look at the Paris market. Paris market got this nice gap here, printing this beautiful three-wave double top pattern to roll down with the US markets. Let's get downside projections of the Paris market. And we have resistance here at 46.53. You're at 46.47. I'm looking for the Paris market to come down to 7,000, 7,020. What is this retracement level here from the Paris market? Almost 9%, 8.81%. When the US corrects. You know what? We didn't do downside targets on Stoxx 50. Stoxx 50, let's go ahead and take this as well. If this is the top, so we're going to pretend that is, then we're looking at 41.85 on Stoxx 50, and that would be a 12% correction. Higher level target, 43.07 for a 9.5% correction. Let's check out the Dow. I'll be sure to give you your downside targets this time. Looking at the Dow, we have our upside targets. If we look at this, we got to the 200% retracement level, 38,923. If we get a little bit more frisky here at the US markets, we have 39,114. Let's go ahead and get the downside projection. Downside projection, guys, we're going to go ahead and pull this to the current high, and you're looking at the Dow 36,267. Let's measure this and see what this is. This is about a 7% correction in the Dow 36,267, which, by the way, also lines up with what? Filling that gap, bringing you to the previous breakout level before this next series of legs here, okay? So it fills that gap. Notice the common theme here, filling the gap on the NASDAQ, filling the gap on the S&P, filling the gap on the Dow, all in harmonic proportionality. So that's my target on the Dow. Let's check out one more thing, the Russell. The Russell, once again, has not confirmed this is a strong bull market with legs. It has confirmed that we are late cycle with a few stocks leading the market up, because the Russell put in its high here off this big rebound, right? But it's been going sideways for 2 years. So it's been going sideways. It got up to 2,100, fell back down. I'm looking at the Russell coming down to 618, 1813, which is a 13.5% retracement from that local high. And if it really fell apart, because remember, a third of the Russell is zombie companies. This is the dash for trash. This is beta. This should be leading in bull markets. If it really fell apart, 1736. That's what I'm looking at on the Russell. Let's just look at two of the formerly Mag 7. Guys, NVIDIA, lots of people ask me, where can this go? Go to your November 2021 high, pull a fib retracement down to that market low in October 2022, and just look how it's tracked so far. When you look at how it's tracked, 1618 harmonic proportionality here gave you awesome abilities to trade this. And when you finally broke out of your Wyckoff trading range, look what price did. Straight up, parabolic move, vertical, 732 on NVIDIA. You're at 721. It's only $11, $12 higher. Gets you to the 2618. Could you wick above? We talked about this last video. Of course, I told you NVIDIA could go to 710, 720. It doesn't matter. Time's more important than price. The cycle is still going to play out. This is dragging the indices higher right now. Watch for 732 and just above to provide a level of resistance before the correction, the topping and correction kick in. Microsoft, same exact fib pool, guys. 433 at the 1618. Microsoft's at 420. Elon's very excited about that number, but watch for this to potentially get up to this target and start putting in its top. Those are the strongest. Amazon's doing a little baby breakout. The rest we covered last video. Guys, have a fantastic weekend. I hope everybody has a fun and safe Sunday. Be sure to like and subscribe. I reply to all the comments. Hope to see you guys in the Discord. Next video is Thursday. Take care, everybody.